Thank you. Before we get on to the question and answer session, I'd like to share a few thoughts with you. As you know, there's been a certain amount of concern, interest in terms of the central bank's role as far as the government securities market is concerned, as far as its regulation and supervising of the non-bank financial institutions, etc. I would like, for the record, to set out some of the actions that the central bank has taken in these areas so that it's very clear that the central bank has been active and has been trying to address some very difficult issues in these areas. So let me first take the government securities market and list some measures that have already been taken. One is the Public Debt Department has introduced pre-bid meetings. That is, before any bond auction, they call in all the primary dealers and brief them in terms of the government borrowing requirement, the auction amount, the series, and other relevant information in relation to the forthcoming auction. So the same information will be available to all primary dealers as a result of these pre-bid meetings. And this has been done since July of this year. Also, since June onwards, a decision has been taken not to accept anything more than the offered amount. Of course, sometimes the central bank will accept less if the terms on offer are not attractive for the government, but we will not accept anything more than the offered amount. In addition, as you all probably are aware, there's been the introduction of the Bloomberg Electronic Trading and Trade Reporting Platform. This has introduced a higher degree of price discovery and greater transparency in the system. And with this increased confidence, we have seen that the volume of trading on the platform has increased significantly. Since the introduction of the platform, the volume of trading in the secondary market has increased significantly. Another matter in terms of ensuring greater security of the auction process has been related to the introduction of CCTV cameras. We now have CCTV cameras in the relevant areas of the Public Debt Department. There is also now an auction calendar. A quarterly auction calendar is presented to all market participants so that everybody again has information about what is forthcoming in terms of the of government auctions. We also have with us a consultant, an advisor from the US Treasury who is looking at a number of things, including the auction process, cash flow management, and debt management strategy, as well as on developing a good database. Though she is from the US Treasury, she's had considerable experience in assisting developing countries in terms of the promotion of their government securities market. So these are things that are already in place. There are a number of things which are in the pipeline. And the most significant of those is the proposed introduction of an electronic trading platform and a bond clearinghouse consisting of a central counterparty clearing and settlement facility for government securities. Now, already the procurement and technical evaluation committees have been established, and we hope to have this live and running hopefully within the next 12 months. This will greatly increase the transparency of the operations of the government securities market. So we're in the process of doing this. The second thing that is important in terms of what is in the pipeline is the development of new auction rules. The Central Bank Public Debt Department consulted all the senior officers in the Central Bank who have worked in the public debt area in developing a new set of auction rules. And the outcome of that process has been shared now with experts from the World Bank and the IMF who are looking at it. We want to get validation of this auction system before we again go live with it, and we hope to do that in the first quarter of 2017. Now this will be a hybrid system. The auction system was introduced because it is very transparent. The idea was to increase transparency, but with the benefit of hindsight and experience, it's apparent that the level of market development is not sufficient to sustain a pure auction system. So we are looking at a hybrid system of competitive and non-competitive bidding. And as I said, once the system has been validated by international experts, we will then consult all the stakeholders and go live with it. There's already a web-based auction system that is operating, but that is being enhanced by the CBSL IT department, and we're very close to being able to introduce the enhanced version of the web-based auction system. And there are a couple of things which are being done in collaboration with the Ministry of Finance. The Treasury is studying the possibility of implementing liability management for US dollar denominated borrowing and thereafter for rupee denominated borrowings, and the CBSL will work very closely with them in developing that. There is a Public Debt Act where a team of professionals are consolidating all the statutes related to debt management, and a separate debt management office is being set up under the auspices of the Ministry of Finance. That actually, in my view, is a very positive development, because for years now the central bank has had to cope with the conflict of interest of, one, trying to conduct an independent monetary policy, and two, to raise money for the government as cheaply as possible. So as you can imagine, those two objectives can come into conflict. So taking the debt management function away from the central bank enables the central bank to have greater room to maneuver in terms of conducting an independent monetary policy. So in my view, that's a very positive development. So these are some of the things that have been done as far as the government securities market from the point of view of the Public Debt Department. There have also been a number of measures taken by the EPF, Employees Provident Fund Department, because as you are all aware, there have been some concerns about the operations of the EPF department as well in relation to the, its involvement in the government securities market operations. Now, almost all, in fact, since the end of October, the EPF no longer participates in secondary market transactions. It operates through the primary auctions. In addition, there is an investment committee which is chaired by Deputy Governor Lankatilaka, which meets daily every morning in order to take investment decisions. And there are a number of structural changes that have actually been effected within the fund management division in terms of how it is organized and how it is staffed. There have also investments of short-term cash surpluses are now restricted to open market operations, and we've also opened up the possibility for the EPF, because it's being denied the opportunity to operate in the secondary market for the moment until we have investigated everything and found out what has happened. The Monetary Board felt that there should be other opportunities for investment for the EPF, because clearly one wants to get as high as possible a return as possible for the EPF members. And those opportunities have included now the capacity for the EPF to now invest in fixed deposits with government banks. The other initiatives include the introduction, or at least the proposed introduction. These are things that are going to be done in the EPF department. The proposed introduction of CCTV, a recording system, and transactions will now, the traders will now undertake transactions only through official mobile phones that have been given to them. So these are all measures that are being taken to strengthen the government, the operations within the government securities market, which has been the subject of considerable controversy in the country. We feel we've made significant progress, and I think we're not saying we've fixed everything. Everything is under constant review, and we're open to suggestions as to how we can do things better. But we do think that my colleagues, I do think that my colleagues, both in the Monetary Board and in the staff of the Central Bank, have thought through these things carefully and taken us forward in terms of having a transparent a government securities market which operates with credibility and integrity. There's also been some controversy regarding the regulation and supervision of non-bank financial institutions and primary dealers. And here again, there are a number of measures that have been introduced. The discussions are ongoing with prospective investors and the management of distressed finance companies. A separate resolution division has been set up within the supervision of non-bank financial institutions department. A separate enforcement unit has been established to prosecute board of directors and senior management of failed finance companies who have been involved in frauds and mismanagement. The Monetary Board has approved the establishment of a special investigation unit which will look at Ponzi schemes around the country, and it will be staffed by police officers or ex-police officers. And overall, the Department for the Supervision of Non-Bank Financial Institutions is moving to a risk-focused supervisory mechanism which has been redesigned to focus on the efficiency and sustainability of institutions. On primary dealers, an internal committee appointed, which has been headed by an assistant governor, has been tasked to propose new regulatory mechanisms to strengthen the primary dealer operations, and that is underway, and the results or their recommendations are expected to be finalized before the end of the year. Now, a subject of great interest to the public, to the press, etc., have been the operations of perpetual treasuries. The on-site examination of perpetual treasuries has been completed. The Monetary Board has considered the examination, and the Monetary Board took action on the 7th of November, and it took further action last Friday, the 25th of November. But at this point, I'm afraid I can't give you any details of the action that we've taken for various reasons. But I can assure you that some action has been taken, and in due course, you will become aware of those actions that the Monetary Board has taken. Finally, very quickly, in terms of the banking sector by large is in pretty robust state. There are one or two little problems, but overall it's in good shape. The major initiatives, of course, the macroprudential measures that were introduced in terms of loan-to-value ratios has also been applied both to the banking as well as the non-bank financial institution sectors. There have been new initiatives in terms of the liquidity coverage ratio under the Basel III liquidity standards. There has been an effort to expand access to banking. There has been an initiative on reporting on cybersecurity events. In addition, there's really implementation of Basel III is underway, and the Department for Bank Supervision, the Bank Supervision Department, is working with all the banks in terms of meeting the minimum capital requirements and leverage ratio for licensed banks. So these are some of the things that are underway. I want to be very clear that the central bank has been very focused in terms of moving forward in all these areas and in addressing some of the challenges that have been out there. The central bank, obviously under the guidance of the Monetary Board. Thank you all very much.